Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right. Good morning, everybody. Welcome back to another live stream. Markets are up. Go figure. Seems like almost every day these days, the indices are higher, and for good reason. We had some powerhouse stocks or companies report some powerhouse numbers. It is earnings season. For those of you guys who do trade indices, I think it's very important that you keep an eye on major stocks in the market and their earnings that are being reported. If you are wondering why the stock market just pumped to a fresh high again, what's going on? Well, yesterday we had Meta and Microsoft report their earnings. And guess what? They both absolutely smashed expectations. Check it out. Here's Meta, which is a stock that I own. I'm feeling pretty good about that right now. The stock, you might say, well, it's down. Well, the market hasn't opened up yet. We got to zoom out to see where it's expected to open up. Up almost at $780, $775. It's up 11.62% in the pre-market. Guys, that's a huge company that just went up by 11.62%. But it doesn't just stop with Meta. You know who else smashed expectations? Better than expected numbers, by the way, on the top and bottom. Meta beat on their earnings by 21%. That's insane. Insane. Their revenue was also a beat of $2.7 billion in revenue. That's wild. And it goes to show how powerful these companies are and how well they are doing in this environment. So if we take a look at the other big one of the biggest, if not, I think it's like the second biggest company in the world, Microsoft. Microsoft smashed expectations, beating by 8% on their earnings and beating by $2.5 billion on revenues. So if you trade the indices, you can't just ignore the major companies that make up the indices. And this morning or yesterday, these companies reported their earnings and they beat by a mile. Another stock that I own is Robinhood. Robinhood beat massively, but the stock is so hyped up right now that even though it beat massively, I mean, these were massive beats. They beat their earnings by 37%. They beat their revenue by 8%. And the stock yet still, is down this morning. That just goes to show you how high the expectations are in this market. So just when you think indices can't keep going higher, right? They can. Good companies can grow and grow and grow. Innovators can keep innovating. They can grow. Trying to make a bet against great companies and the stock market when it's in, bull mode is just so hard to do. And it's a trade that I just rarely ever even attempt because, again, we have great innovative companies utilizing AI and seeing growth in those areas. There's reasons to be optimistic. Now, you still want to be careful. You don't want to chase these things off a cliff kind of thing. but they look very strong. If the U.S. economy, then if the U.S. economy is well, then why is gold coming back today? This big move. Gold. Okay, so it's up under 1% here today. I mean, gold doesn't move just based on the U.S. economy. It moves on many factors: geopolitics, the U.S. economy, the global economy, Europe, the UK, Japan, Asia. It looks at the whole world's economy and says if things are looking pretty good, it's a little less attractive. It's been getting beat down because things have been pretty good recently. Yes, you're getting a little bit of a bounce, but the recent move, we've had like a week of selling in gold. But then also it moves on geopolitical stuff. So even if the economies of the world were doing really well, but then we have some sort of flare up in the Middle East or, Eastern Europe or China, Taiwan, if something happens, gold can also make a significant move higher, right? So we'll take a look at gold. We'll look at some currencies. We'll look at indices. Keep an eye on all of it here this morning, as we do have some key numbers coming out. We have core PCE this morning, of course, a very important measurement of inflation for the Fed. This will also move pretty much everything if there's a surprise. Remember that news is only as market moving as it is surprising. If the market is surprised by the figures that come out, then yes, it can move a lot. But if the market sees numbers that it mostly expected, it probably won't move very much. So I'm just going to pull up an economic calendar here just to keep an eye on this data as it comes in. So let's see here. Not sure what's happening with my calendar. Economic calendar. Okay, so we have PCE numbers. Where are they? So here it is. We are expecting core PCE year over year to come in at 2.7%. And we get this number in 8 minutes. So we'll come back to that. But yes, that is likely to move the whole market. But I did want to talk about, in terms of if you're somebody who watches the indices, those earnings being reported very strong like that is more important than anything else. The economy seems to be holding up well. We're still expecting interest rate cuts. Yes, that stuff is important. But at the end of the day, if you're an index trader, and I want you to remember this, if you trade the NASDAQ, if you trade currencies, if you trade the NASDAQ, if you trade any of the indices, at the end of the day, the most important thing to stocks over the long term is their earnings, right? Morning, Nick. Do you do courses? Yes, for free on our website. If you are not already using our free courses, then I got you on that. Hold on. Let me see if I can get this for you. If you guys want our free fundamental analysis course, very popular, by the way, I'm going to drop the link here. It's totally free. You don't have to pay a dime for it. However, let me ask you guys something. Okay, so this link that I just dropped, that's our free course. It's a free fundamental analysis course, and it's very complex or comprehensive. Just going to ask you a favor. If you take advantage of our course, do not take it for granted. A lot of times people think, oh, if I have to not pay, or if I have to, not pay for something, I'm not going to really take it seriously. That's what we see. Most people don't take stuff very seriously just because it's free. But these streams, these courses that we put out, they are worth something, and we do make money in other ways. But don't take for granted what we offer for free. That is a really, really, heartfelt course. We put a lot of time and energy into building that course, and it is available for free. We do it because it helps us to get you on our email newsletter, which you can unsubscribe at any point, but enter your email and we send you all sorts of cool stuff about like trading and tips and prop firm, challenge discounts and things like that. So if you're interested in checking out our free course, click that link. You'll also be added to our email newsletter. And at any point, if you don't want to get emails from us, just unsubscribe. We make it really easy to get out of our emails if you don't want them. So let's talk about the dollar. You're my mentor now. I'm nobody's mentor. I am just a trader. I love the markets. I share my experience here, but I'm not a teacher. I don't claim to be anyone's mentor. I trade. I do this thing every single day. And if you learn things from my videos, I'm thrilled about it. But I don't like teach anyone one-on-one or anything like that. So the fundamental course was also put together with my help, but also a lot of it was put together by our team, which was awesome to have done. So it's very professionally done. Okay, so let's talk about the dollar. Dollar to me looks really strong. We've talked about this. Lee says, didn't JP state that interest rate cuts weren't pre-planned, so September's expected cuts are just market theories? Lee, that's a great question, but I want to talk about that because you bring up a really good point. So the Fed chair yesterday made the point that there was no decision made for September, which here's what we have to understand though. He has to say that. As the Fed chair, his job is to, according to his own, statements and the general predisposition of the Fed is to be data dependent. Like, we're going to watch the data, we're going to make a decision. In his own mind, he probably has an opinion, but he's not going to say that because he knows he represents a committee of Fed officials that are very smart people. He's not the only one that makes all the decisions. Of course, he's the chairman, but he's not, a dictator. So he is making, kind of the statement of, we're still in the process of making the decision, essentially. But at the end of the day, what's interesting is that the Fed actually tends to listen to what the market says more so than anyone else, right? The Fed tends to watch what the bond market thinks the Fed is going to do. Believe it or not, I think more leading than waiting for Powell to say something is to watch the 10-year and 2-year government bond yields. They tend to move ahead of what Powell's going to do next. When the Fed cut interest rates back in September of last year, immediately following the rate cuts, the bond market, even though Powell, and team were like, hey, we're cutting rates, we think we're in a good spot. Look, the bond market started going back up. Yields started going up. Rates started going back up after the Fed started cutting rates. Why? Because the bond market predicted, okay, now they're going to go on pause. And they did. They went on pause till now. They're still on pause. So watch the bond market. If you want to know what Powell's going to say, just watch the bond market. It's leading. It leads what Powell is likely to say most of the time. So it is very interesting to keep an eye on yields. And yields also move heavily what happens in the dollar. The 10-year yield and the dollar, not always, but they tend to move in the same direction. So keep an eye on them. Yoshi says, I watched your earlier interview with Etienne. Your mindset on slow and steady is humbling because we see the gains of other traders on social media, like expectation versus reality thing. Thanks for watching that. And yeah, I always enjoy doing podcast episodes with Etienne. He's awesome. And yes, slow and steady wins the race. It's the only way I know how to make money in the markets. I could not tell you, sometimes people will say, well, how do I grow accounts quicker? And I'm like, I genuinely don't know. I don't know how to grow accounts quickly. I know how to grow accounts conservatively and steadily and double money over time. I can do that pretty predictably in markets. What I can't do, and what I'll never lie to you and say I can do, is I don't know how to make small amounts of money into large amounts of money quickly because I'm not a market, I don't know with certainty what the market's going to do. And that's what you assume you have to be able to do in order to get that kind of move. So let's see, we're going to come back to the dollar here. Dollar looks really strong, but we do have some economic data dropping here in just a second. So I'm going to go ahead and switch over to our all markets view, see what our core PCE numbers are coming in at. We'll go ahead and roll our breaking news. All right, let's see what we get. So currencies, indices over here. Got the dollar here, oil here, and Bitcoin here. Gold is right here for your reference. Let's see if we get any movement. Sometimes you do, sometimes you don't. Just depends on how surprising the news is. Gold just timidly lower here. No big movement just yet. Dollar index looking a little firm here. Stocks flat for now. Russell's still not bouncing back nearly as much as the other indices today. All right, let's see. Let's see if we got our numbers in. We did. Okay, so core. Here we go. Okay, so PCE, core PCE came in at 2.8%. That is higher than expected. That is slightly dollar bullish. Additionally, we had a 2.6% read for headline PCE compared to expected 2.5%. So we did get a slightly higher than anticipated inflation report this morning on both the core and headline PCE numbers. So the year-over-year number is what I like to look at. So year-over-year number, both headline and core came in line or came slightly higher than expected. The month-over-month figure came in line with expectations. Same with core. So sort of in line with expectations, slightly higher. Dollar looking a little bit firm, but nothing crazy. No giant surprise here this morning. It seems like market's not moving very much off this. So we can keep going with our analysis. And I want to come back to that concept on the dollar, talk a little bit about this dollar move that I think I've said this the last few days. I'm going to stick with it, especially with the technical breakout that we saw yesterday. I think the dollar is in the process of breaking higher. The U.S. economy is roaring compared to expectations right now. I mean, GDP numbers came in at 3%. And I want to unpack this because there's a lot to it. Can we talk about GDP numbers? It was a fascinating topic. Excuse me. So GDP numbers, quarter over quarter, came in 3% for the US. The expectation was a sharp, strong bounce back to 2.5%. We beat that by a substantial margin. So what and why is this? Where is this huge burst in GDP growth coming from? Well, it seems like the consensus is just like GDP got hit hard because a lot of people import. So what we need to understand about GDP, imports, right? Guys, imports play a big role in the GDP statistic. So when all of the worries around tariffs were flaring up, we saw imports dramatically rise, contributing more to a negative GDP statistic that we saw last time around. Last quarter, we saw imports, massive imports, trying to scapegoat, get in front of, proceed before the tariffs were announced or before they were put into place. During this pause period, we saw a huge surge in imports. Well, guess what? Deals have been made. Things seem a lot less rocky than they were a couple months ago. And GDP stats rose like crazy, largely because that stopped. In fact, imports dramatically declined on a quarter by quarter basis, right? So now people are like, okay, a lot of deals are happening and they're not panicking so much to rush to do all that importing. And so maybe everybody got their importing done, right? They rushed to do their importing and then everybody stopped importing because, it's sort of like business as usual. It's just amazing how the market does this, right? The market has a wonderful ability to absolutely terrify the masses. And if you were terrified, look, you're not alone. I was pretty scared by it. All the craziness. Oh my gosh, are we going to go into isolationists? Are we going to be, feudal Japan in hundreds of years ago where they tried to just completely shut off all, interaction with the rest of the world? Is that going to be the US now? It looked scary for a minute. And of course, the market has a wonderful ability to make everyone panic just before those things, those worst case scenarios don't come true, and the market rips with one of the most impressive rallies that we've ever had in market history. I mean, if you don't sense that the market is sort of designed to hurt the little guy, I don't know of a better example. Headlines terrify everyone. People are petrified. You know, just every single news article is, we've got a madman who wants to change. And then all of a sudden the market just rips, the most impressive rally we've ever seen in years. So the reason I bring that up is it's amazing how the market tends to do that. We as humans, we panic at the worst possible times, and those are the best sort of opportunities in hindsight. So, to me, when I look at the indices now, now we have these companies putting up incredible earnings, Meta and Microsoft both smashing expectations. Last night, right, Meta is up in the pre-market by 11.4%. You're talking about a huge company. This is a massive company who just smashed their earnings expectations. Same with Microsoft, the second biggest company in the world. It might be the biggest company after this. I think it's in the race with NVIDIA, but actually NVIDIA has been on such a tear, and I think NVIDIA also went up on this news as well. Yeah. So yeah, trade like a machine with no emotion. Easier said than done, but I get what you're saying, right? This context of like, look, when the market is in total free fall and panic mode, you can't give in to that. It's so repeatable how this works. People get euphoric on the tops and they get terrified on the bottoms. And so, they let their emotions completely take control. And I've said this, I've given this example 3,000 times in my channel this year. A lot of people over here were overly euphoric that liked Trump, and they were like, hey, he's going to send us into the golden era of stocks. And so they bought like crazy. They bought Bitcoin, bought calls, got super bullish, leveraged up. And then when the market crashed, those people got destroyed. And then people who hate Trump were like, hey, he's going to send us into, the end of days. So they sold or shorted the market, and the market ripped back the other way. Like it is an effective tool at taking money from the majority of investors. And so leave your emotions, leave your politics, leave your biases to the best that you can, leave them to the side, and make sure that you are rules based in what you're doing to a strong degree. It's very important because, again, we all have our biases and emotions, and oh my gosh, this looks scary out there, right? But we have to, at the end of the day, if we're going to be playing with fire here, which is the markets are, your fire, you have to have some strategic approach that is going to keep you out of trouble. So VIX is back down to 15. We had a short spike yesterday during the FOMC stuff, but really the FOMC stuff was not a huge market mover. We didn't really see much of a move actually at all. The real mover yesterday was earnings after the bell. Oil prices down a little bit here yesterday, cooling off from that big pump that we saw yesterday. I'm still in my trade. USO, I'll show you guys. I gave back a little bit on the P&L on this one today, but looking for an opportunity on USO to trail stops further. So if we can get oil prices making a push this morning or this afternoon, if we can get oil prices to take out those highs, I have trailed my stop loss already, right? But I'm looking for some sort of higher low. But I'm going to let it run. Like, I'm not going to tighten this too much. If it comes back and tests, that's fine. If it breaks that, I'm going to take my profit on it. Let's take a look at gold here. Gold's up 1% this morning. Nice little bounce back from the sell-off that we saw yesterday. Take a look at gold on the daily chart. Still very, very range bound. Yesterday, I don't know if you guys joined me on the trading battle. I saw a couple of you guys in there. It was a lot of fun. My goodness, that was a lot of talent in one room. To have Akil Stokes, Chris Pulver hanging out with me, that was really fun. But listening to their thoughts and how they're approaching, markets right now was really insightful to me too. I made the point that, Chris Pulver and Akil Stokes, I started live streaming on YouTube. I started trading in like 2015, 2016. I started live streaming at the end of 2018 going into 2019. And at that time I was watching content from Akil Stokes and Chris Pulver. So it was very full circle for me. It was really cool. Where was it, Nick? Yeah, so you can go find it on The Trading Battle, their YouTube channel. They're a really cool channel sponsored by 8cap that I have been working with them. So I do a lot of consulting work for brokerages. I do content and advertising and consulting work. It's kind of my day job with a whole list of brokerages from all over the world. I love my job. It's really fun. I love being able to work with brokerages and prop firms and like get a little behind the scenes and see what they're doing. And my gosh, their operations are huge. So anyways, yeah, the Trading Battle is a project that they have going on and that I have been asked to do some hosting for them. So I've been hosting their battles. So much fun. Tune into it, or you can go watch the recording. I highly recommend it. It was packed full of great conversation. If you're looking for something to watch this weekend or later today or something, listen to it back. I mean, just listening to the way they take on the markets is very insightful. I have my strategy, I have my approach, but if I was to learn from somebody, it would be people like Chris Pulver and Akil Stokes. Wonderful, wonderful traders, very, very methodical in what they do. Akil Stokes is very, very technical. But let me actually say this. If you're somebody who's like really technical in what you do, Akil Stokes is the prime example of what I would encourage you to do in terms of fundamental analysis. Akil Stokes, self-proclaimed, says he's 99% technical analysis focused, but he knows what's going on with the fundamentals. And I was like, dude, you need to come on the stream and talk to some of these people, because some people, like, they believe, oh, I should know nothing about fundamentals, or I don't need to know anything about it. But Akil Stokes, he doesn't necessarily trade based on fundamentals, but he knows what's going on. He knows what's moving the markets. And he knows to generally know when to look for big momentum moves based on the fundamentals. And it's fascinating to hear his thought process. So yeah, definitely check it out. Head over to The Trading Battle and you can go watch it. Can you link it? Yes. James and Chandler are not currently behind the booth. They're still coming into the office. We started early today. The Trading Battle on YouTube. I'll link it for you. But yes, we had a really awesome battle yesterday. I'm going to drop the link to it. Yesterday, here it is. Share, copy the link. Boom. Here it is. Could you take a look at the Eco Surprise Meter on the Edge Finder? Yes, you beat me to it. I want to look at some currencies, see what's going on. So if I take a look at the Economic Surprise Meter here this morning, check this out. USD is in the bull territory. British pound is in neutral. What is going on with the euro to get 100% beat rate right now? We're going to look at that. Swiss franc, Aussie dollar looking weak, CAD looking weak, New Zealand dollar looking strong, the yen looking strong or almost strong. Average economic outperformance across the board right now. So we are seeing some strength in terms of economic outperformance from the 8 majors on average. This is important because this is a bearish catalyst for gold. It's a bullish one for stocks. If the economies of the world are generally outperforming analyst or economist expectations, that is a positive trend. So keep an eye. If you have the Edge Finder and you use the Economic Surprise Meter, keep an eye on this tool. I really like having the average one down here because it gives you an idea of what the global economy. This could be, you could call this your global economic surprise. Actually, can I ask you guys for some feedback really quick? What's a better name for this tool? The average economic surprise score or the average global economic surprise score? What should I call this? Currently, we have it named average economic surprise score, and it takes into consideration all 8 of the major currencies and their economic surprise. Should I call it the global economic surprise score? I feel like that's a good... I'm going to do it right now because I don't want to forget to do this. Global. I think global. I think I like it. Yeah. I feel like that makes more sense if you're just coming to the software and you're like, what is this? What do you mean average? So we still have average AVG right here, but it's taking, and it's reflected here in the description. Global economic score. Global economic surprise score. The word surprise is really important because sometimes people get caught up on this. Look, the economic surprise meter is not saying that, it's not saying Europe is the strongest economy of the world. That's not what this is saying, right? We have to understand the surprise word here is relative to expectations, which economies are upbeat versus downbeat. That is it, right? It's not saying Europe is the best economy, because if it was just based on that, it would just be US all the time, best economy, because, it is in terms of growth and all the, money flow and all that stuff. But in terms of outperformance relative to underperformance, that is what we're looking at. So I want to just inspect this Europe thing. What's going on here? So unemployment rate came in. Oh, so we had some statistics from Europe this morning. Unemployment came in good. Wow. GDP growth came in good. Forecasting 0 got 0.1. Wow. Yeah, so this is going to take me out of the running for any sort of euro dollar shorts. I'll tell you that right now. And you can see, Europe holding up, even though we've had a strong dollar. You can still see like pound dollar underperforming today. Gosh, that pound dollar meltdown has just really kept going. I still think there's more move here, to be honest. I think pound dollar is also getting, our software's picking up as a bearish reading. It was yesterday. Let me see. Pound dollar, yes. Look at this, guys. Pound dollar getting a -12, very bearish score. Yesterday, we had a ton of people buy the Edge Finder. It was awesome. We had a lot of people who took advantage of our discount that we're doing right now. So let me just give you some context before I forget to do that. So we do a sale each year during summer, and it's coming to a close. Today's the last day, and it is our biggest discount offer that we do all year long. It's 45% off to get a copy of the Edge Finder right now. Long story short, buy the dip. If you are interested in getting a copy of the Edge Finder, do not miss the opportunity to get one at the lowest cost of the year. So let me just drop this link here. If you are interested in getting a copy and want to lock in the 45% off subscriber discount before it ends, click the link right here that's just been dropped in the chat to speak directly to our support team who can set you up with that discount. The other thing about this is that if you need to split it up, we had a lot of people who reached out because they heard that we are doing this for a limited time. We are doing payment plan as an option. So if you want to split the cost of the Edge Finder into 3 payments, we can do that too. But if you are somebody who's like, okay, I know I want to get a copy of the Edge Finder, today is the day. If you wait, you will not be able to take advantage of the 45% off. It's almost half its usual price. So if you're somebody who's like, I want the Edge Finder, but I can't afford it all right now, absolutely take a second. I'm telling you, it is the last call. Send us a message. Let us know you're interested in the 45% off and you want to lock it in, but split it into 3 payments if you need to. But do not miss the opportunity to do so. The link is in the description or in the chat right now to speak to our support team. We do offer, like I said, for a limited time, we're splitting it into 3 payments. Will there be a big Black Friday discount? Andrew, yes, but I'm telling you, again, I'm as transparent as I can with this stuff. We are doing a Black Friday sale later this year, but it's not going to be a better discount than this. This is the best one. This is the best discount that we can offer you all year long. So if you're somebody who wants the Edge Finder, I don't know how else to say it, but I'm not bluffing. That is the best price that we'll be doing on Edge Finder all year long, and it's the last day to get it. Don't miss it. It's a great tool. We have traders all over the world using it. And if you're looking to get fundamental analysis and sentiment analysis under your wing and you're trying to better yourself at that stuff, there is no better software that I know that keeps it simple, concise, and useful to traders all around the world. So don't miss it. Is there a sale for Forex signals? Yeah. So our VIP signal service is also 45% off for the rest of the day. So if you're interested in either one of those, again, is it a one-time payment? Yes, it is. It's a one-time payment, or you can split it into 3 just to make it easier for people who need to. But I know I'm coming in with a heavy sales pitch, but genuinely, that is your last call warning. Don't miss it. VIX is down 2.71% here this morning. Russell up a little bit here. Dow Jones up just a little bit. NASDAQ still pushing. Again, the catalyst here yesterday, guys, we talked about this earlier, but if you're just tuning in, Meta earnings smashed expectations. Stock's up 11% in the pre-market. This is where the pre-market will open up. You can see it easier if we switch to the 4-hour chart. Look at this candle. Boom. Meta indices off the rails because of that. S&P 500 also pushing higher. You also had Microsoft. Nice push. Look at Microsoft, man. That's a huge company. To grow at the rate that Microsoft is growing at such a large size, I mean, this thing's on top of the world, man. That's crazy. And Microsoft's been a winner for like, what, 2 decades, 3 decades? It's huge. Absolutely huge. Don't let Bloomberg hear you. Man, you're right. However, Bloomberg terminal is $2,000 a month. It's crazy. The Edge Finder is $1,400 without the sale for a lifetime access. Bloomberg terminal is $2,000 every single month. I mean, this stuff it's not cheap to build. I can tell you that much. It is very expensive to build tools and to maintain them and have support teams behind them. But it's what what I love doing. We build a really cool product, and it's fun every day to work on it and continue to see people all around the world using it. And so we're not going anywhere, but again, that discount is going somewhere. It's going away. Russell pulling back here. I was looking at this yesterday. I would like to get in on some of the indices, but I'm not in a particularly big rush to do so, especially with like NASDAQ, for example. Like, I think NAS has room to really pull back here, right? If you get a pullback, 2K monthly. Yeah. I mean, it's an institutional software. You got hedge funds using Bloomberg terminal and all these sort of crazy wealthy companies. I mean, it's more of like a B2B type software. It's business. But see, that's where I think we fit nicely in the market. Edgefinder fits nicely because it's average trader friendly. Like, it's not so complex that it's not like speaking another language to even look at it. I find the Bloomberg terminal is really cool, but it's incredibly complicated. The Edgefinder is meant to be simple. Like, you can pick it up and out of the box, it's already making sense to you. Still, there's a learning curve to Edgefinder, like there is everything, but out of the box, it should make sense. It's looking at sentiment data, technical data, and economic data, and it's generating bullish and bearish readings. You can go more in depth if you'd like. You can go through the economic data. You can pull up the US economic heat map, right? You have all these tools at your disposal that you can go play around with. Some traders love just looking at the US economic heat map. Some traders love really going through the COT data history and tracking what institutions are buying and selling. Like, people love the tool for different reasons, but the Edgefinder is not built for hedge funds. It's built for real people, real traders who are not, that are just average traders, right? People who are looking to implement fundamental analysis that don't want to have a PhD to use the software. That's what we specialize in. And I don't say that in any way to degrade the average trader. Like, I'm not calling anybody dumb. I like it simple. Like, keep things simple. It's just better to keep things simple, in my opinion. So are the softwares built in a way that is intended to be kept simple, not to be so complex that you don't know what you're looking at anymore? In 10 years, people start leaving the Bloomberg for the competition, Edgefinder. I think they're doing it now. I mean, the Edgefinder it's really grown. We're really proud of what we've done with it. And I think a large reason is because, people don't need to be spending $2,000 a month Yes, the Bloomberg terminal has some amazing features. It's way more real time. It's way, it's a powerful product. Don't get me wrong. I would not talk bad at all about the Bloomberg terminal, even though it is a technical competitor to what we offer. I think we fit a market that is, people who don't want to spend 48 hours in a 24-hour period trying to figure out what they're looking at. Looking at the monthly chart on gold, what's your thoughts in the next 3 months? Yeah, gold to me is just range bound. I wouldn't be surprised if in the next 3 months we stayed sideways, to be completely honest. We've been in consolidation for the last 3 months. My path of least resistance for gold is still very neutral. If I take a look at what the Edge Finder is saying about gold, you can see gold is getting a neutral -2 score. Sentiment data is suggesting some bullishness. Technicals are very softly bullish with the long-term trend still intact, but economic data does not suggest a lot of bullishness for gold. Why? Because the US dollar looks really strong off of strong GDP statistics, strong retail sales numbers, strong NFP reports. That's not an environment where I'm like gun-ho to buy gold. So to me, the thing to do right now with gold is to brush it to the side and do something else. Right? If there's no setup for me on gold, then I'm going to do something else with my time. I don't need to be staring at gold and just being like, when is it going to make a move? Because you could have spent the last few months, if you were only trading gold in the last 3 months and you were like, you trade, strong breakout trends on the higher time frames, then you've been either taking losing trades for the most part, break even at best, unless you're trading like the lower time frames. If you're trading like the 5-minute or something and you've caught some trends, and then that's not who I'm talking about. But if you're somebody who trades the daily, right, or you trade the 4-hour, this thing has been incredibly choppy and it's been a trap to trade in many ways, in my opinion. This is a really tough environment to look for trend trades. And what a lot of people will do is they'll make the mistake of being like, well, I only really trade gold, so I need to take some trend trades. And they'll start picturing trend trades in their head and taking trades that are not really there. Is anybody feeling that frustration with gold? If you're a trend trader who trades gold and you've been like annoyed by price action, let me know in the comments. I know I'm not the only one. I love trading gold, but this has been an environment in which, look, we're choppy. Like I got to trade something else. Somebody brought up copper in the audience. Quiet Menace says, have you seen copper, Nick? Yes, it's absolutely insane. Did you guys see this? Look, this is going to be a shocker. If you haven't seen copper, get ready. Look at that. That's a daily chart, guys. I guess I shouldn't have put all my money in copper right there. I'm just kidding. I did not put all my money in copper, but copper absolutely dropped hard on some tariff news. Oh my gosh. Like, I don't know if anybody, guys, that's a 25% drop in the price of copper in like a 24-hour period. That's insane. Copper prices dropping dramatically. We saw some announcements of tariffs. I haven't actually looked very closely at them. I guess I should on why this. I just don't usually trade copper. It's not a market that I watch very closely. I guess, who knows what's going on there. But there was also some stuff with Brazil, I believe, some new trade things with Brazil. I don't see a huge movement here. But yeah, definitely interesting moves. Dollar index still looking strong. I'm looking for pullbacks on the dollar if we can get some downside moves here in the next day or two. That 99 area looks really attractive to me for further upside in the dollar. I am officially on the bullish side as of a couple days back. And with this breakout, looking really attractive for pullbacks in my personal view on the dollar. We'll see though. You still have, like, you may still be in the context of like maybe a long-term downtrend that might still be intact, but maybe we're going to head to test this 101.50 area. And so maybe the bulls are just getting their turn. You know, bulls have just been destroyed this year on the dollar. Maybe it's time to see a little bit of a swing back in the dollar for some time. But for now, at least in the short run, I think there's more upside in the dollar. So we'll see. But with that said, in just a second, guys, here we're going to transition to our next show host. It's Trader Tom. He's back. You guys enjoyed his segment a lot last week or week before that. We had him on. It was a really great time speaking with Tom. So we're going to just in a second break to bringing him on. So if you have not heard of Trader Tom before, he is a highly technical trader, focuses a lot on currencies, and we'll be dropping a link to his YouTube channel in just a second for you guys to check him out and get more insights from him. Stay tuned. Trader Tom is up just after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hi guys, how are you? Trader Tom here from Simply Forex. Thanks guys for having me on again. Always a pleasure. And I'm actually coming to you from the Philippines. I'm here for the next 5 weeks, but that's the beauty of trading, right? You can trade from anywhere. So if you hear torrential rain and winds and my internet stops, you know why. Nick was talking about gold. So I'm going to start there because I'm actually in a gold sell trade. So let me explain why I'm in this trade, right? And I always do a top-down approach, and I'm going to start with the weekly chart. So I look at weekly, I look at daily, that gives me my direction, and then I look for H4, even H1 sometimes to really pinpoint that entry. Right, and this is exactly what I've done with gold. So let's take a look. So we know gold has been strong, right? This has been stronger than Bruce Lee, right? It is super strong, but it has hit this ceiling that it just isn't going through, right? And every time it hits this level, we get a big bearish reaction. And last week was no different, right? We got a great big bearish weekly candle form at that level, right? That is a huge rejection. So weekly's telling me, okay, I can potentially look for sells, but then I need more confluence, more reasons to take the trade, right? So now if we could drop down to the day chart, you can also see we broke out of this important trend line, right? So you can see here, this trend line has been respected, right? And eventually we broke it with this candle right here. This is the daily chart. That is a daily break of a trend line. Now, you're probably thinking, Tom, why didn't you get in up here? Because, this would be selling directly into support. This is a support level for me through here, right? So I wasn't interested at this point. But then a couple of days later, we got this, this is more bearish than Yogi Bear, right? I couldn't think of a bear. I went for Yogi Bear, right? This is super bearish. Yeah, it doesn't get much more bearish than that. Okay, so this was the catalyst. We got a nice retrace, and I'll show you the exact entry on the H4 with a view to taking price back down to this level of support here. This is the idea. If I just scroll out, you can see this has proven to be good support previously. So, support and resistance levels are always my targets, right? Always. And then basically, guys, weekly, daily tell me I can sell, and then I refine my entry by using the H4. And again, we have this trend line, right? We've got this trend line. that's been hitting this level. We even hit it again today. Okay. And then basically I entered, guys, because not only is it a good trend level, but good trend line, but you can clearly see H4 is in this bearish downtrend. So we've got trend line resistance, okay, but also, guys, right, we have got the moving average 20, which I use as dynamic resistance as well. So we've got like double whammy resistance. And we've also got this level through here, this grey horizontal level. I know price is tracking above it, but if we can get a nice big bearish close below it, you know, really confident with this trade, right? Now, let me just show you that level. You can see this level was proven to be, right, good support and resistance previously. So that's where we are with gold. You can see my entry on the screen. I've put my stop loss just above this high. And, you know, I want to talk to you briefly about it. There's one thing entering a trade, right? I'm not saying entering trades is easy, right? Trading's not easy. Anyone who's done it for any amount of time will testify to that. But finding an entry isn't overly difficult, right? You know, for all the reasons I explained, you know, gold seems like a logical sell trade to me, okay? But the real skill, I think, comes in managing trades, right? Some people are in the school of thought where I just enter a trade, that's my target, that's my stop loss, and I leave it, right? Nothing wrong with that whatsoever, you know, absolutely fine. But I will manage trades if things don't start behaving as I expected them to. And let me just show you what I mean. Like I've expected price to react at this level because it's a trend line and come lower. And I've put my stop loss well out of the way, right? Because putting your stop loss a good distance away gives you options. And this is what I mean, because if we end up with a big bullish H4 candle breaking out of this trend line, you know, breaking above the moving average 20, I may just close this trade. I'll just close this trade early, and, you know, I normally risk 1%. So this would normally be 1%. So I would only take like a 0.6% loss. And for me, managing this trade, it saves me, you know, over the course of a year, it saves me a lot of R, right? It saves me a lot of money, quite frankly. So that's how I will manage this trade. If it starts breaking above here, I will get out early. So yeah, there you go, guys. That's the gold trade that I am in. And obviously gold is paired with US dollar, right? And we just had some good US dollar news come out. And we also had good US dollar news yesterday. So we know the US dollar has been pretty bullish, right? We've seen some strength in the US dollar. So, you know, let's hope it continues and we have a nice trade back down to these lows. And another aspect of me managing trades is taking partial profits, right? So when price comes back down to this level, these last lows, this is support, right? It's reacted before. Chances are it could react again. So because of that reason, I will take some profit here. So if this is successful, I will take, let's say, 80% profit, and then I will let 20% run, right? And then if price, you know, continues to do this, right? Price comes down, we get this, and we get another pullback, I can still enter again. I can enter my, you know, 80% that I took out of the trade. I can enter back in here to take it down lower. All right, guys. So yeah, gold is one trade that I am looking at. Right, we're not looking at a trade that I am in right now. What else am I looking at? I'm also in a pound New Zealand dollar trade. Okay, so let me also explain this trade, guys. And again, you know, all I do is look at the, you know, yeah, I don't want to say the word simple. It's logical, right? The way I trade, as Nick said, I'm a very technical trader. right? And I just look at things like structure and trend, support and resistance levels, candlesticks, and also this concept of value. I want to trade from areas of value. I don't want to trade overextended markets, right? And that's basically the 4 principles I obey every day in the market, you know, and that's what that's when my trading turned a corner, to be quite honest with you. I used to have like indicators everywhere on my chart, right? I used to have Ichimoku candles, MACD, RSI. I used Hikinashi candles. You know, my chart was a mess. But once I stripped that all away and just focused on what moves price, then my trading drastically improved, right? And that's price action technical trading. So that's all I focus on. And again, those 4 things is exactly what I'm going to focus on when I explain this pound New Zealand trade. Now, whether this trade works out or not, I trade my setup because it makes sense to me, right? So let's start with the weekly chart, exactly as we did with gold, right? And you can see gold, pound New Zealand dollar is just ranging between here and here, right? It's just ranging, okay? And this is where we're at, right? It's not quite back down to the bottom of the range. Now, look at that weekly candle, more bearish than Winnie the Pooh. Sorry, I shouldn't laugh at my own jokes. I'm just trying to think of as many bears for bearish. Anyway, right, we've got a massive big weekly candle. We're now tracking below the moving average 20. And we've just got a bit more room. You know, there's some room for this trade to move into, back down to these lows, right? So weekly tells me I can sell. Again, I go to the daily chart and I want it to back up what I'm seeing, right? And let's just track trend and structure, right? So you can see exactly what I'm seeing. And this is where we're at, right? We are in a downtrend, lower highs, lower lows. That in any textbook is a downtrend, right? You don't have to be Warren Buffett to see that. Although I wish I was Warren Buffett, right? A cool few billion in the bank. I don't have that, unfortunately. Right? So this is where we're at. We're in a downtrend. Weekly's in a range with a big bearish candle. So that's how this is what I do for my morning analysis every morning. So I look for trades where weekly is telling me I can sell and daily is telling me I can sell. Right? Now, there's one thing getting your direction for the day, right? It's another thing finding an entry. So I just use weekly and daily to give me direction, right? It's as simple as that, using price action. And then I need to find an entry. So this is when I drop down to the H4, right? And this is looking a little bit scruffy, so bear with me, right? Now, let me zoom out a little bit more. So this was in a downtrend. It was then in an uptrend, but it stopped making higher highs, right? That's always a bit of a telltale sign that the trend has slowed down or the trend is changing, especially when you start seeing candles like this, right? Ever since we've hit this level, just look at the candles, right? You get so much information in the candles, right? Top wicks, right? Bit of indecision and then bang, right? Look at that. And that's basically when I took the trade, guys, right? We had this trend line going up through here. I drew 2 trend lines just to include these lows here and this low here. But as soon as this H4 candle broke below that level, I was interested in selling, right? And I'm looking to take price back down to these lows here. And as always, guys, I'll take some partial profit, right? Maybe 80% is typically what I take, and then I let 20% run. But this figure can vary, but usually 80%, yeah. And there you go, guys. Pound New Zealand dollar. Now, again, whether this trade works out or not is irrelevant to me, right? The reason I've taken this trade is because it ticks so many boxes for me, right? And for that reason, I entered the trade. As simple as that, guys, right? So we shall see. Now, I don't like this candle, right? I don't want to see this, but then it's been closely followed by a bit of a doji, a bit of a bearish candle. Now, if we drop down to the H1, what you'll see here is price may still want to track this trend line. Right? It still might want to make its way back up to here, test this high, and then come crashing down. If that does happen, guys, you know, I think we've got a nice trade on our hands. I think we've got a nice trade on our hands, you know, irrespective of what it does, right? Now, again, right, I've got a decision to make. If price start, right, so at the moment it's in a downtrend. But if price starts doing this, right, breaking out of this trend line, right, we start to see higher lows on the H1, similar to my gold trade, right? We've got some options, right? Do I still want to be in this trade if H1 structure starts trending upwards? You know, maybe this is reflected in a big bullish candle. Again, I may close the trade early if that does happen, right? If it doesn't and price keeps coming down, then happy days. That's exactly what we want. All right, guys. So, yeah, those are two trades that I am currently in. What else to look at? Yeah, let's just take a look at that copper move. Yeah, look at that. My God. Crazy. I remember this. This was all this big push up. We thought this was big, right? But that was all tariffs. I can't remember exactly, but it was to do with tariffs. But look at that. This dwarfs that. Right, crazy move on copper. I just want gold to do this now. And yeah, and then let's look at US dollar strength, right? You know, we're seeing it everywhere. There's a couple of trades I'm interested in here as well, but you know, maybe we've missed the boat, right? So one trade I also like with regards to US dollar strength, which is clearly what we're seeing in the market right now, is Aussie dollar US dollar. So if we drop down to the day chart, we have literally just had a fresh structure break. There's not many things I like more in trading than a fresh structure break, right? It's like a cold beer on a hot summer's day, right? That's the only way that's the only thing I can compare it to, right? And here we go, right? We've broken these lows, right? We've even broken that wick, right? We've broken these lows in here, and we know all of this US dollar strength we've been seeing. Great big bearish candle in a downtrend now because we broke this low, and we still got a little bit of room to move into, right? I'd probably aim for this 4,000 level, right? And if you just zoom out, you can see historically, which is obviously what we look for with support and resistance levels, historically, this has proven to be a very good level. Now, yeah, you're probably thinking, Tom, you like a trend line. Yes, I do. I like, you know, when I think of support and resistance, I think of three things. I think of my gray zones, which are basically horizontal support and resistance. And I think of trend lines as support and resistance. And then the third one, I think of the moving average 20 as dynamic resistance, right? So bearing that in mind, you can see my alarm in here, right? So I'm not a big believer in staring at the screens all day, right? You'll go blind, or, you know, I don't think that's factual. Don't think you will actually go blind. But, you know, who wants to look at a bloody screen all day, right? I done trading for freedom, not to be glued at a screen, right? So, like I said, I can come to the Philippines. I can do, trade wherever you like. So I just set alarms up, right? Simple as that. Areas I'm interested in, I set an alarm. And it's exactly that with Aussie dollar, US dollar. So if we track your H4 structure, right, I would like to see this come back up, test this high here, right? We've got this trend line, so we've got a resistance level. The moving average 20 will have caught up with price by then. So we've got dynamic resistance as well. And I will be all over this trade. Yeah, I would start selling from there. So we shall see. If price does this and comes down and hits our target, then okay, no problem. We've missed it. No FOMO. There's always a trade around the corner. Literally, there's always a trade in the market, right? So yeah, that's what I'm looking at with Aussie dollar, US dollar. Some of the other US dollar pairs are just a little bit too far gone, right? If you look at euro, US dollar, at the when I started speaking about price action and technical analysis, right? And I spoke of this concept of value. This has sweet FA value, right? None. Yeah, obviously everyone's seeing this sell-off. Everyone wants to sell euro, US dollar, but I'm not going to start selling there, right? No value whatsoever. But if we get a retrace, back towards these lows, right? If I drag that across, moving average 20 starts coming round, then I'm very much interested in selling euro, US dollar. So that's the problem with a lot of euro pairs at the moment. They've all just, left the building. Elvis is the euro and Elvis has left the building. So apologies for all of my analogies. You look at any of them, euro, yen, okay, take that back. Absolutely flying up. But at the start of the day, right? Yeah, dropped a little bit too far. Euro, Aussie dollar, okay, it's at support. And what other one was flying? Yeah, euro, New Zealand dollar I like as well, but I just want to see a pullback on these euro pairs. And again, you can see my alarm, right? And why is my alarm there? Well, we've got a bit of a trend line coming down. There is some support through here, right? You can clearly see that. Let me just draw that level in. Right? You can see price has reacted here, 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 here. Okay, we would, if price come up, we would be trading above the moving average 20. It's not a deal breaker for me as long as this H4 structure holds. And I'd be interested, I might even move this down a little bit actually. And I would be interested in trading from here with New Zealand dollar, euro, New Zealand dollar. What else? Yeah, euro pound is at an interesting level. This is one that's had a nice pullback. Let's start with the weekly this time because this was at this weekly high and super overextended. Right? So it's no surprise we've had this big sell-off, right? When markets become very, very overextended, typically you'll get a sell-off, not, and when I say a sell-off, not a change of trend, but a retrace, right? For you to then buy it again. Now, this is actually looking like a sell trade, and I'll show you why on the day chart, but we're getting this big bearish reaction at a weekly high, right? There's so many things going on in the market right now. I'm also going to show you, I've got 5 minutes, a Canadian dollar Swiss franc trade I'm interested in. So euro pound, right? And then we've just had a fresh structure break. So you remember how much I like a fresh structure break as much as a beer on a hot day, right? We've broken this low, we're in a downtrend. And nice big bearish candle, and we've just had nice big bearish daily candles. Price has retraced towards the moving average 20, and if we go to the H4, the moving average 20. and an area of resistance, right? So euro pound is in this downtrend. I would consider selling euro pound if we get a nice big bearish candle at this level, right? Potentially come lower. Well, so yeah, so Canadian dollar, Swiss franc, guys. Also wanted to show you this. Okay, Elvis may have left the building here. I did actually have my alarm in here, right? So why did I move it? So I had my alarm in here, okay, because let's do a top-down approach again, right? Let's just look at the daily. I mean, this doesn't really need to look at any other chart, right? Daily was in a downtrend. It became range bound. It broke the range, right? Yesterday, we saw a lot of strength come into the Canadian dollar, right? And this is represented by this candle here. And this is what we're seeing, right? So obviously, I want to buy that, yeah? And I want to take it up to the next area of resistance, right? Again, just very logical stuff, guys, right? Not rocket science. And if we drop down to the H4, you can see this trend line, right? Price has been respecting it. And I just wanted a deeper retrace, right? Moving average 20 catching up. I would have entered this bad boy, right? At this level. You know, hindsight's a beautiful thing. You know, we know that was previous resistance. Could we have just entered there? Yes, we could have done. I mean, look at the reaction we've had so far. But I wanted price to come down to here. Now, the reason I moved my alarm up to here was because we're still in a H4 uptrend. And this has proven itself as to be a good area that buyers step in, right? Look at the reaction. And then if it comes back down to this level again, you know, chances are it's caught up with this trend line and the moving average 20. And this could be a really nice area for buys as well. So keep an eye out for this Canadian dollar Swiss franc trade. We just got a couple of minutes left, guys. So let me just take a look at my pound New Zealand trade. Okay. All right. Moving in the right direction, not setting the world alight right now. Let's have a look at the H1. You know, it's these, you don't want to see bottom wicks, right? You want to see nice, big, bearish candles like this now, right? Like I say, maybe it wants to come back up to this high before it comes lower. And let's take a look at gold. I just want to, I've got my alarms in anyway. But yeah, I don't want to see gold start breaking these highs. So let's see what happens here as well, guys, right? Somebody on my live stream earlier says it takes a brave man to sell gold. We shall see. Maybe they are right. Okay, so yeah, they're the two trades that I'm in. What else is interesting at the moment? The NASDAQ. That was one leery move yesterday, right? Wasn't it off the back of something to do with Microsoft? But I bet this caught some traders out, right? Now, if you look at the H4, okay, there was this break of this trend line. Our price was tracking this trend line nicely, and then we broke down, right? And then we even had a nice bearish candle. I know because I was tempted to sell this, right? Thankfully, I didn't, right? Now, if you look at the H1, we even had a really nice H1 structure break through this level here, right? Only just, but it broke it, yeah, right? You can see it's proven to be a really nice level. It had broken out of this H4 or even H1 trend line, right? We've got a break of structure. Yeah, you won't believe how close I came to selling this stops above here. And then just look at the reaction. Yeah, right? But it's very, so that was a crazy reaction, super bullish. Whereas if we look at the Dow Jones, right, I still want to sell it, right? If we go to the H4 now, right, we again, similar to the NASDAQ, right, we were tracking this trend line, right? We started to break down on the H4, right? That is a clear structure break, lower lows, lower highs, and then we started tracking this trend line, right? It's been obeying this trend line, and it's obeying it again. We got a nice big bearish candle, but again, what was putting me off this trade is the absolute break of correlation between the Dow Jones and the NASDAQ. S&P and NASDAQ I want to buy, Dow Jones I want to sell, right? Yeah, but price is coming down now. So it'll be interesting to see what happens with the indices today. All right, guys. So, yeah, I believe that is my time. Guys, if you've enjoyed my analysis, please don't forget to subscribe to my channel, Simply Forex. I'm sure the guys will put a link somewhere, so please go check it out. Always enjoy coming on the show, guys, and hopefully see you next week. Adios.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Okay, what is up, people? Hope everyone is doing good. As always, guys, we'll go through a bunch of pairs. I'll show some pairs I'm interested in. We'll go through some watch list, USD, yen. Anything you guys are interested in, please let us know. We'll take a look. Any specific time frames as well, let me know. Because most of the time I'll be on the 4-hour daily chart, but if you're a bit more intraday, drop it in the chat. But it's been an interesting week. Of course, we had a lot of news recently. We've still got a lot of news coming up as well. Dollar has been pretty strong, and it does look like dollar could be turning around. And I am only looking for opportunities that do favor dollar strength at the moment. I'm not sure about the longer term trend with USD, as of course it's been weak for quite a while, and we're starting to see a shift in that. Is this a complete turnaround in the trend, or is this a temporary pullback before we do continue to the upside? We're not to know, but what I can say is momentum is of course looking very aggressively bearish. This is Euro USD on the daily chart. Actually, let me get the ticker and the interval so you guys can see. So this is Euro dollar on the daily chart, very aggressive momentum to the downside, and I'm simply just looking for a continuation of that. I was looking for shorts yesterday, but we just didn't see much of a pullback, unfortunately. Was looking for a push into this area, lovely consolidation, really aggressive fall. Was looking to see if price will be kind enough to retest that area before continuing, but we had the news, of course, and price continued to fall to the downside. So now I am a bit more interested in this area. Still keep an eye of that consolidation. I just don't see price pulling back that much. But I do like the look of this level here, which is hovering around 1.155. So I'm extremely bearish on Euro USD. Again, of course, another USD pair. So if I can see a pullback at some stage, probably not this week, maybe next week, maybe if NFP can give us a bit of a kickstart, that would be nice. But I am looking for some pullbacks and more downside. In terms of potential targets, I'm looking at the higher time frames just to get kind of like an overview of Euro. There's a big range over here, and I think that's an interesting area to keep an eye on. It could be an area which sends us to the upside, but at least an area which potentially makes sense to lock in some gains and maybe start trading a stop loss a little bit. So if I do get short, I'd probably keep it simple. So a push back into the prior low, naturally always a healthy target. And I might leave a little bit to continue back to this area at 1.125. But that's something I'll probably call more into more depth when actually the time is right. But for now, definitely looking more downside for Euro. Of course, if you take a look at the DXY, which is extremely bullish, and of course doing the exact inverse of what Euro is doing at the moment. Lovely inverse head and shoulder pattern here. Got your left head, right shoulder. That's your, of course, pattern. There's a neckline and there's the breakout. Now I'm looking at a lot more upside here for the DXY. Technically, it's not a big break of structure. This is still technically our last major lower high in the market. After this swing low, we create this swing high to continue the trend. So technically, we haven't broken the major structure. We have broke through this high, which is, of course, still important as well. But I'd say that's sort of more minor, which is why I'm not necessarily longer term bullish on the dollar. We very well could come up to prices around here, start to form a lower high, respect this area, and continue falling. So that's kind of why I'm not cemented dollar complete reversal. But in terms of the here and now, which is pretty much the most important thing, we are looking pretty bullish. So I like the retest of this high here. Lovely resistance, of course, that gave us the last pullback. Since then, a very, very commanding breakout. If I could see a pullback into this area, that probably would correspond to the level we just mentioned on Euro. I think that would be a very nice place for a buy. Also, if you look into a bit more detail, you've got this brief consolidation there on the 4-hour chart, which lines up pretty well with that resistance. This would be an area of demand as well, so a nice overlap between the two confluences there. So that would be a very nice place for a buy, but it's just a waiting game now to see if Euro, if the dollar, not Euro, well, also Euro as well, but if the dollar could pull back into this area and we could look for some buying opportunities off this area. So 99 is kind of where I want to see the dollar get to, and then that should provide probably some healthy pullbacks in Euro, Pound, Aussie dollar, probably dollar CAD, even maybe dollar CHF too. But I must say, USD with this strength and this kind of momentum is exactly what I've been wanting, because it's been really corrective for the past few weeks. It's been like a slow downtrend. I haven't really been looking to trade the dollar on the way down because it's just so corrective. I'm looking for that kind of momentum and then following the momentum. And now finally we've got that. So opportunities are coming in. There's a lot of opportunities in the dollar now. And I'm kind of just hoping to see if we can get some pullbacks of those markets and take some longs off the back of that. Excuse me. Drop the DAX. Okay, we could take a look at the DAX. The last time I looked at the DAX, we were looking very flat, and I'm pretty sure, yeah, we're still looking pretty flat at the moment. I think the DAX is tiring. Of course, it's still very bullish as a whole, but I do think we are due a bit of a drop here. If I mark out resistance from the previous swing high and take that across, to me, it looks like price is just banging its head on that resistance and it's essentially been failing to break through. So I do think we can see some lower prices and a bigger pullback is due for this one. But I wouldn't short outright. I would wait to see if we can break through the floor here, because this is kind of what's just about keeping the market going sideways. If that floor breaks, that would be the green light to short the DAX on a pullback. Even on the breakout, I'm not really one to trade breakouts, but you know, if breakouts are your sort of type of trading style, it makes sense, especially when we do breakout consolidations. So that could be something to look into. But if I was looking to trade the DAX, I would wait for a clear break of support here. That would be my kind of green light to say DAX is bearish. It's failed to create new highs. So at this point, I would be expecting lower highs and lower lows, and maybe a push all the way back into support, which would be this area here at 23,100. So looking at the DAX, I'll be getting ready for some shorts. At the moment, it's just sideways, so I wouldn't really be doing anything, to be honest, in terms of all the price action here. My plan would just be wait and see which way we break out. If we do break to the upside, great. The trend's continuing. You know, next pullback after, so on and so forth. Just keep looking to buy the dips, really. If we do crack the floor here, that's a clear sign of a, not necessarily a reversal, but I would expect more. I would expect at least some type of bearish trend here to form. And yeah, a pullback, a retest, maybe even a retest of the low there, that would be great. And possibly a pushback down into 23,200. So keep an eye on the DAX. I think looking at a lot of the indices, US 30 looks quite tired. US 500 and NAS seem to be loving life right now. They're still pushing really hard. Actually, they're pulling back this on today, but yes, they did close pretty well. I mean, in terms of the bigger picture, they have been performing pretty well, just kind of grinding higher. But as a whole, I do think a pullback is needed here for NAS at some point in time. It's difficult to say when, because we could always see another bullish day. You know, I wouldn't want to try and call the tops here and say, okay, we need a pullback now. Yeah, it's always very difficult to do that, especially when the indices are in this flow here. So yeah, S&P, I think the DAX are the same, US 30 to a degree, NAS 100. A lot of the major indices, I feel like, do need a bigger pullback at some stage, but I'd rather wait for the market to drop first and then look for signs of continuation afterwards, rather than trying to catch the highs here, because we could always go a little bit higher. That's the beauty of a trend. We could always just trend for a little bit high enough to take your stop loss before turning around. So I'd rather wait for the market to make its move, something like that, and then we can speak about something like this, which is, again, not to say you're guaranteed to make a profit there, but at least it's a bit more conservative and not as risky. Pound USD to go to 1.316. Okay, we'll have a look at that. Pound USD is another pair on my watch list, which I'm keeping a close eye on. Lovely bearish leg here. Lovely head and shoulder pattern. Straight from the textbooks with this one with pound. Left shoulder, head, right shoulder there. There's your neckline. Absolutely smashed straight through. So we're looking pretty bearish here with pound. The plan really is just looking for another pullback and more downside. Keeping it really simple. You mentioned the push to 1.316. That would be the support level here. Yeah, we're not too far away. I don't see much stopping us from getting there, to be honest. So I would have to agree with that. Yeah, I mean, I would expect price to get there. We're only like, what, 50 pips away from there. So probably less. Yeah, I can see price definitely doing that. I'm still very much interested in pullbacks to this area, even if we do go and hit support here. This would be my preferred opportunity if something like that could happen. Just basically looking to catch the next lower high. 1, 2, and 3. That would be very nice indeed. And yeah, I'll be expecting more downside because I zoom out, look at the high time frames. You know, price last time it took out a major high, had a pretty big pullback. You can see we took out a major high here, massive pullback, massive dump to the downside. And then we've gone and done that again here. We've taken another massive high. Looks like things are shifting bearish. I'm not suggesting we're going to have another massive sell-off, but there is room to the downside for us to fall into, even if the bigger move is still to the upside there for the dollar. So for the time being, pretty short bias. We're back underneath this high here. That for me is a strong sign to keep selling the dollar, and especially when all of this momentum is coming into the market. It's not like a slow grind lower. It's a very impulsive push. So I quite like what I'm seeing with pound. Gold, okay, I'm not a big fan of gold still, to be honest. Yeah, I mean, gold has been selling off quite aggressively over the past few days here, but the way I see it, especially when I zoom out on the 4-hour chart, we've got equal lows down here. We've got, for the most part, equal highs up there. You know, this is pretty much a ranging market, so I'm not very interested in the middle, but if price can get to the low, this would be a smart place for a buy, because when the market's ranging, the best opportunities are right at the lows or right at the highs. You know, can you find the support level, the lowest point to pick the buy from a range, or the highest point to pick the sell from a range? That's the better areas to trade. In the middle, I find personally is where things get quite choppy. You don't really get a good place for a stop loss either. It's not really worth it. So if price can trend a little bit lower, come and test this area around 32.62. I think that's a smart place to pick up a long. There's also some support below us here, which I agree looks really good. Nice place for a buy as well. That would be 31.40, we can call it. But as I zoom out, look at the bigger picture. Gold is still very bullish to me. I would suggest there is some signs that we might head low on the weekly chart. That last week's candle did close pretty aggressively bearish. Well, at least with the wick anyway, not necessarily with the body. But we are really finding it difficult at these areas. So if this support doesn't hold, we'd be looking at this next level for a buy. So we'll see what we can do at each of those areas. 32.62, that could be a nice place for a bounce. If it doesn't hold and we do push lower, Then we do have support down here at 31.40. The aim of the game is same, looking for the rejections. If we see something sufficient, take some buys, and just looking for a bounce really, not necessarily looking for the home run and a push all the way back to the highs. At least looking for a reaction. So that's kind of where I'm at with gold and silver. Silver's one I'm keeping a close eye on. I actually prefer silver to gold because silver's got a bit more momentum to it. It has sold off pretty aggressively, but I am looking at a higher time frame level as to where price could be headed towards. I think the weekly will show it better. We have resistance back here, which we broke out of quite long ago actually. That was back at the start of June. Really aggressive breakout, and price is yet to come back and retest that. So that's kind of why I like it, because if silver does go through a pretty big sell-off, maybe we do see a retest of this area, and this is where some big swings could take place. I'm still very much long-term bullish on silver. We do have a long-term bullish trend, which is still kicking away to the upside. I'm not seeing any red flags for that trend to say that, okay, it's about to end. Yes, we're seeing some rejection here, which might mean some more downside, but by no means a reversal. So if we can get back to this area, I think from a swing trading bias, if any of you guys are looking for a long-term play, I think this is a very smart place to look for those entries, and a situation where we could write it back to highs, maybe further as well. There's also a range to our left, which price is trading right now, which is where we spent a few days before absolutely flying to the upside. We're back there again. So this could be an area which, again, the market does find support and does continue higher. I think this would be my favorite area because it's such a big level in the higher time frame, and we haven't come back for a retest. But I will keep an eye on this consolidation because it could, of course, still give us more upside. At the moment, we're looking pretty bearish. We are starting to form some wicks though, so we are slowing down. Dollar is still quite strong right now, so I don't know if that will still push silver lower. Yeah, that is a possibility, but at the moment we are starting to slow down, so I'm going to keep a close eye to see how we develop in this area. And if things look good, I will take a stab at it. If things don't look good, then I'll wait for this area at 34.4. So I'm more focused on silver than gold, just because there's a bit more of a trend here. Gold has been flat for quite some time now, so it's more about just trading the range rather than actually trading a trend or trying to follow momentum really with gold. In terms of some of the other USD pairs, because a lot of the pairs I'm interested in right now do involve USD, especially with the momentum we've seen. I'm going to keep a close eye on not the interest rates, on NFP tomorrow, because I'm kind of hoping if NFP will give us some weakness for the dollar as a bit of a pullback, and that could provide some nice buying opportunities off the back of that, maybe late Friday or if not early Monday potentially. So I'm kind of hoping for that tomorrow, but we will see. But as we can see, this is a pretty significant level for dollar CHF, a level which I've kept my eye on quite some time. And since yesterday, we've had a very lovely close back above that level. So all of this was originally acting as support, once over there, second time over there. Of course, we broke through, used it as resistance, and now we're back above. And now this, of course, will be support again. So the plan is very simple for dollar CHF. I'm looking at this as, again, not necessarily a bottom for the market, but at least a temporary low. We might trend for a little bit and then continue lower. I can see that happening, but I do think there'll be some upside on a pullback or two, and that's all I'm looking for. Just a pullback, could last a week, could last 2 weeks, and then maybe there's some shorts on the way back down. I'm not looking to try and hold a trade for multiple months here. I'm just looking to see if I can play the current trend here on the daily chart, which if I can see a pullback into this area, I'll be more than happy to find a buy. We've also got this brief little pause here, which again acts like a nice area of demand as well. So a push to 0.806 looks really good to me, and some buys off the back of that. I think I'll be targeting resistance up here. I think I could get a decent swing back into that level. Not asking too much from the market, pretty reasonable, and I quite like the opportunity here. So yeah, dollar pairs look really, really good to me. Dollar CHF especially, euro especially, pound especially. Aussie dollar, not so much. New Zealand dollar, not so much. I still think they're likely to fall, and dollar's going to be strong as well. So I think they'll all make similar moves. But in just terms of the setup, which again, as a technical trader, it's the most important part. I'm not a big fan of the setup on Aussie or New Zealand dollar. Dollar CAD looks okay. I can touch on that one. But I think the three I mentioned, dollar CHF, pound, euro, look the best to me. Dollar CAD I don't mind. Definitely looks a lot better than Aussie, New Zealand dollar. This one just broke out with consolidation as well. So you can see we've been sideways for quite some time. Equal highs, equal lows. Now we've got a clear break to the upside. So this is kind of what I'll be looking for on dollar CAD. And a push back to the high over there. So dollar CAD's not that bad. It's just a simple break and retest opportunity here in terms of the range. The only reason why I'm kind of a little bit cautious with dollar CAD is because if I kind of scale to like the weekly chart, there's a pretty big level of resistance running through the market here. As you can see, held us moving sideways for quite a while. We're coming back into that same area. So in terms of letting the trade run, I'm unsure about dollar CAD. Euro's got slightly cleaner path. Pound's got slightly cleaner path. And I'd argue dollar CHF as well. But regardless, I think the retest should look good, especially if you're looking for like a trade for a day or two. So yeah, very, very bullish on the USD. First pattern M ends at 1.9. Is that, you talking about gold? Okay. Yeah, I mean, you can interpret gold in many ways. You know, people will analyze gold and say different things about it. I think that's quite a bad thing, really, because sometimes the clear opportunities, everyone kind of looks at the same thing and has the same opinion about gold, in terms of the technicals anyway. But yeah, the way I see it, it just looks hideous, really. Very, very sideways market. The larger trend is pretty clear. I like what I'm seeing. You know, gorgeous trends, been trending for like 2 years almost. So it's been a very aggressive trend, which has provided some nice pullbacks along the way. Now we're just coming into a new phase for gold. It's a sideways phase. Who knows how long it could go on for. We had actually a very similar situation not too long ago. Well, I say not too long ago, it's actually pretty long ago. If I go to the weekly chart, you know, we had this massive consolidation, then we had a big breakout, and then we went into another consolidation over here, and of course price broke out again. And that's kind of the phase we're in right now with gold. You know, a really kind of aggressive trend which lasted about from, let's say, 2018 October to August 2020, so almost 2-year period, aggressive trend there for gold. Then we went into a pretty big consolidation afterwards. Maybe gold is getting ready for something like that potentially. This trend here lasted a similar amount, November 2022. Well, it's longer than that if I take it from that low. The breakout happened in the start of 2024, but that low is actually November 2022, so it's been quite a while. And of course, it's already July, or actually almost August 2025. So it's been some time. But yeah, what I'm trying to say is that we've had aggressive trends before on gold, and typically we either get quite a big drop or a prolonged consolidation. You know, this was kind of like a really aggressive trend. It did give us a consolidation at the start, but we did see a pretty big downturn. And I think gold could be coming into another situation of that. We might see gold consolidate for a while. Maybe we've still got juice to the upside. I don't want to necessarily predict it in terms of this is exactly what we're going to do, but be prepared for that. It could happen. We could consolidate for quite a while. So I'm not necessarily looking for anything too crazy for gold. And that's another reason why I prefer silver, because when I zoom out on silver, all I see is a pretty nice trend. I'm not seeing any signs of slowing down just yet. I'm not even seeing any signs of sideways. So I'd rather keep tackling silver. I know they do kind of have similar traits. And if silver does start to slow down, I'll start to back away, of course. Or I'll keep an eye on it, but I wouldn't be as aggressively trying to buy it. Silver right now, trend is still very, very strong, and we've got a lovely level below us. So that's kind of where I'm at with silver and gold, but we'll see. Things can change. Never know, we could get a breakout next week. But yeah, I'm keeping my distance for them for now. A lot of FX pairs look good, and especially yen as well. Yen's been quite interesting. Of course, we had some news recently with the yen, and that has caused a lot of weakness with the yen. This is the yen basket, by the way, which is the yen against other currencies. At the moment, the yen is looking really, really weak. This is the current daily candle for the yen. A lot of wicks to the upside there, and looks like we're going to get a pretty strong close to the downside. I know we still got 7 hours left before it does close, but I'll be pretty surprised if that does pull back bullish. Especially, I don't think there's any news regarding the yen between now and the end of the day. But we're looking pretty bearish here. So my best bet would be a continuation lower. There is support to the left of us. And again, I wouldn't be surprised if we were going to come and go and attack those levels. So Aussie, likely to drop. Look at the wicks to the upside. Your price has shown you in several occasions it's trying to rally, but failing to do so. And if that's the case, we're probably going to move in the opposite direction. We're falling pretty hard right now. So if I go shift over to the yen pairs, I bet we're having a pretty big rally, especially dollar yen. Dollar yen must be pushing pretty hard. Yeah, dollar yen is looking pretty strong. Yeah, nice close yesterday. It looks like we're seeing continuation of that. We've got some highs over here to watch out for. 151070. This is where I'm watching dollar yen. Resistance around there. Potentially could form another lower high. We've got one over there, second, could see a third, so being cautious of that. But dollar yen's looking really bullish. Most yen pairs will be looking really bullish right now. So again, I would suggest pull back some more upside. There's been some pullbacks already, like pound yen. I've been eyeing up opportunities on this one, but I just haven't pulled the trigger just because I'm not a fan of where we're trading into. We've got a lot of resistance above our heads. We did see an okay pullback into the trend line here again. Looks like price is bouncing well. But I didn't like the fact that we are kind of trading into resistance right here. I'm kind of waiting to see if price can actually break out of that, and then I'll be happy to look for pullbacks and some buying opportunities, because I do expect to see pound yen get all the way up there if we do see a successful break of that level, which is all the way up at 207.8. And that looks like a pretty big move to me, so I'm happy with that. At the moment, it looks like we've had another pullback back into the trend line. Whether we break resistance now or not too sure. We'll have to wait and see. But pound yen looking quite bullish. I was keeping tabs on this one to see if we will break the trend line or not. Looks like we're just about holding on to it, so I'm going to keep a close eye. Aussie dollar, okay, we can have a look at that one. No problem. Yeah, we'll get stronger next week, no doubt. I mean, it's due to get stronger a lot. It's been weak for quite some time. I mean, just quick look at quick glance at the yen basket quickly. Then I'll go take a look at Aussie dollar. But it's been falling for quite some time. And it hasn't necessarily been falling like it's falling out the sky. It's been like a slow, grindy fall, which, again, most of the time does end up with a pretty significant bounce. So I do think we can see some upside. If it happens next week, maybe. I think we'll still see price take out this low at the very least. I mean, we're very close to doing it anyway, but I'd be very surprised if price just turns around suddenly. I think we'll likely take out lows there. We've got support here, which we might go and bounce from. But at the moment, yen is looking really weak to me, so I wouldn't want to be looking to buy yet. I would wait for some signs of reversal. But I can see the need for upside because we've been slowly falling or quite stretched here. So I do think the market naturally will have a bounce at some point. But I'll wait for some more evidence before getting involved in that. In terms of Aussie dollar, so I didn't touch on this one. I said this is probably one of my least favorite USD pairs as of right now. It's broken out the channel finally. Kudos to Aussie dollar for doing that. It was taking quite some time. It's finally done that. Very aggressive close yesterday. I do think we can see some more downsides. Normally when price breaks out of a channel, I'm always looking for price to come to the start of the channel. It's always kind of like a textbook target, if you will. If price breaks out of a channel, you'll expect it to get to the start of where the channel formed, the low or the high of it, depending if it's ascending or descending. In this case, I'm looking for us to come back into that support level. But it's a very aggressive close. Momentum's really with the bears. I expect more upside in the dollar anyway. So I think we can keep falling. I think this is a nice area to keep an eye on for a short. Brief consolidation, nice drop, turn into a very nice level of supply. And of course, you got the retest of the low of the channel. I think that'll be a sensible place for a short. And targets around 0.635, I would say. Makes the most sense. But yeah, I do expect us to keep falling. Really solid close outside the channel. I do think we can see a lot more downside. And I think that is the end of my segment, or coming to the end of my segment. I do appreciate each and every one of you tuning in to the stream and tagging along with me. If you have enjoyed it, make sure you do drop a like on the stream, and check out my channel if you're interested to see more of me. I'm pretty sure the team have dropped the link to my channel in the chat. There it is. So yeah, really appreciate you guys having me on. Take care, and I'll see you all next week.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.